What's the best way for a complete beginner to start investing online with just $100? If you're watching this, chances are you're finally ready to take your money seriously, but you just need someone to cut through the noise and give you real, practical direction. Here on Money Stackers, I break down personal finance in a way beginners can understand. And today, I'm going to tell you exactly what happened when I invested $100 into 5 different assets, all simple investments you can make right from your phone or laptop. Over the past 4 years, I tracked the performance of individual stocks, EITS, real estate investment trusts, cryptocurrency gold index. Funds will compare each of these using 5 beginner-friendly categories: learning curve, passive income, potential, tax efficiency, risk level, results. How much my $100 became in 4 years. I'm not a financial advisor. I'm simply showing you my real results and explaining what I've learned. Always do your own research before investing. Individual stocks. Buying individual stocks means owning a small part of a company. Sounds exciting, right? But excitement doesn't always equal good investing. Learning curve high. If you want to pick individual stocks successfully, you must understand a company's business model, leadership, financial statements, long-term growth potential, and its competitive strength. You cannot simply guess. Stock picking without research is gambling. I personally analyze income statements, balance sheets, and cash flow trends. Whenever I pick a stock, I hold it 2 to 10 years, not days. Passive income potential. 2 ways to earn price appreciation. Stock value increases dividends. Payments from companies that share profits. Not all companies pay dividends, but the ones that do can generate consistent passive income. Tax efficiency, great. Stocks inside a Roth IRA grow completely tax-free. In the UK, a stocks and shares ISA shields profits and dividends. Risk level high. Markets are unpredictable. Even strong companies can crash. One news headline can send a stock up or down 20%. Years ago, I randomly picked Samsung by throwing a dart at a board of 20 stocks. That $100 became $67.76 after 4 years, a minus 32% loss. But if the dart landed on Apple, Microsoft, or Nvidia, Apple gives $170, Microsoft gives $188, Nvidia gives $908. See the difference? Individual stocks require skill, not luck. About investing apps. No sponsorship claim. A well-known investor, Mark Tilbury, often teaches beginners how fractional shares and demo accounts help new investors learn without risking real money. I personally used a similar type of platform to test these $100 experiments, and it worked reliably. If you want to explore beginner-friendly apps, I've placed useful links in the description. You're free to use them or any platform you prefer. REITs, real estate investment trusts, allow you to invest in real estate without buying a property yourself. Imagine you and thousands of other people pooling money together to buy properties and share rental income. That's how REITs work. Learning curve, authoritative are far easier than buying a physical property. No tenants, no mortgages, no property taxes. Just buy a REIT and you instantly own a piece of multiple properties. Passive income potential, excellent. By law, REITs must distribute 90% of taxable income to shareholders. This means big dividend potential. Most commercial tenants sign long-term leases, so income is often steady. Tax efficiency, held in tax-advantaged accounts. ISA, Roth IRA, dividends and growth can be tax-free. Risk level, medium, not risk-free. Property markets fluctuate, and REITs exposed to troubled sectors like commercial real estate during the pandemic might lose value. Results: my $100 REIT investment is worth $98.59 today, but I earned $11.93 in dividends, making my real value $110.52 equals 10.52. Return REITs usually don't explode in value. They provide steady passive income. Asterisk. Bitcoin and Ethereum are the most recognized examples. Learning curve, moderate, you must understand. But hardware wallets are the safest. Passive income potential, moderate. Crypto doesn't pay dividends, but staking and yield farming offer rewards. However, platforms can fail, prices crash suddenly, hacks happen. Personally, I only hold Bitcoin and Ethereum long-term, not small altcoins. Tax efficiency, almost every trade is taxable. Staking rewards also count as income. Crypto cannot be held in traditional tax shelters in many countries. Risk level, Very age crypto is extremely volatile. It can go up 1000% or down 90%. In the same year, results my $100 Bitcoin investment is now worth $652.24 gives 552% profit. But this is not typical. Bitcoin happened to be the best performing asset of the decade. Many cryptocurrencies go to zero. Crypto can build wealth fast, but also destroy it fast. Gold is one of the oldest stores of value. When the economy struggles, people run toward gold. Learning curve. LOW. Two main ways to invest: physical gold coins or bars gold ETFs. The easier option for beginners. Jewelry is not an investment because of craftsmanship, markup, passive income potential, paid dividends or interest. It simply holds value and protects wealth. Tax efficiency. Countries treat certain gold coins as legal tender, meaning no capital gains tax. Gold ETFs can also be placed in tax-free accounts. Risk level medium. Gold rarely crashes, but it also rarely skyrockets. It grows steadily over decades. Results my $100 gold investment is worth $140.10 gives 40% return. Gold protects wealth, not multiplies it. This is where beginners should start. An index fund is a basket of the top companies like Apple, Amazon, Microsoft bundled together. You don't pick winners. You invest in the market as a whole. Learning curve. LOW. No research needed. Just choose an index like the S&P 500 and let time do the work. Passive income potential. LODRAT index funds include many companies that pay dividends, which get reinvested automatically. Tax efficiency. JARAT index funds inside IS as or Roth IRAs grow tax-free. Risk level low because they are diversified across hundreds of companies. They ride out market fluctuations better than individual stocks. Results my $100 index fund investment is worth $179.57 gives 79% return. Not the highest return, but asterisk index funds are the most reliable, beginner-friendly investment of all time. Which investment is best for beginners? Here's the truth. Crypto has the biggest upside, but biggest risk. Gold protects wealth. REITs pay steady income. Stocks can go very right or very wrong. Index funds almost always win long-term if you're starting with just $100. The smartest path is index funds for stability and growth. REITs for passive income, a small amount in Bitcoin, optional. This gives you diversification without confusion. In this entire video, whenever I talk about practicing using fractional shares or demo accounts, this comes from a principle I learned from popular investor Mark Tilbury, who has taught millions how to get started easily. I personally tested similar beginner-friendly platforms when running this experiment, and they worked reliably for me. If you want to check out apps like these, you'll find helpful links in the description. You're completely free to use them or any platform you trust. This is not a sponsorship. This is simply me showing you resources that I use successfully, whether you're investing $100 or $10,000. Remember, consistency beats perfection. Time beats timing. Start now. Start small, but just start. If you want more simple investing guides, don't forget to follow Money Stackers. Your future self will thank you.